This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Weekend cliffhanger. The big issue hanging over the market could come to a head this weekend as Greece and its creditors resume talks tomorrow.
Historic ruling. The Supreme Court gives same-sex couples the right to marry, and that could have implications for business.
Left in the dust. It's been a big year for small caps, but can the run continue in the second half? All that and more tonight for Nightly Business Report this Friday, June the 26th. Good evening, everybody. I'm Bill Griffith in tonight for Tyler Matheson.
And I'm Sue Herrera. A major ruling from the Supreme Court and a mixed close for stocks. But we begin tonight with Greece, where the clock is ticking. Today, that indebted country rejected a 5-month extension of its bailout. And with no deal yet, that means Greece is one day closer to missing a key payment deadline. Talks with its creditors will continue this weekend, but significant differences remain, with next week's June 30th deadline fast approaching. The Greek finance minister is holding out hope that an agreement to release much-needed funds can still be reached, as Greek Prime Minister Alexis Tsipras calls an urgent meeting of his cabinet. Steve Sedgwick has more from Syntagma Square in the heart of Athens.
Friday night in central Athens, and young Greeks are gathering in Syntagma Square, right in the heart of the capital city of Greece. They're not gathering for a Friday night out, they're gathering for yet another demonstration, this time sponsored by the Communist Party, to protest against the terms laid down by creditors in this continuing battle to avoid a Greek default. Late on Friday evening, we thought we might have a proposal that would work for the Greek people. It was a €15.5 billion extension to the second bailout package from creditors including the ECB, the IMF and the European Commission. But that was immediately turned down by the Greek Prime Minister Alexis Tsipras and his Finance Minister Yanis Varoufakis. They said this was unacceptable to Greece. It was blackmail, is the way the Greek Prime Minister put it.
The European Union foundation principles were democracy, solidarity, equality, mutual respect. These principles were not based on blackmails and ultimatum.
The conditionality attached to that extension of financing for Greece included more pension reform, more VAT reform, and changes to the tax code that the Greeks had put forward earlier in the week. It looks like, as we head to more negotiations in Brussels over the weekend, that the Greek default is still very much on the cards. This is Steve Sedgwick for Nightly Business Report in Athens.
Well, investors did remain cautious today ahead of that meeting in Brussels that could decide Greece's fate. Nike rose more than 4% today on better than expected earnings, which we told you about last night. That increase accounted for more than half of the Dow's gains today. But the Nasdaq went the other direction as results from Micron weighed on that index. Micron was down sharply today. By the close, the blue chip average, the Dow, rose by 56 points to 17,946. The Nasdaq down 31 points. The S&P 500 was just a fraction lower. For the week, the major averages all down fractionally. So with Greece looming and a shortened holiday week ahead of us, what should investors be looking for when the opening bell rings come Monday? Bob Pisani has more from the New York Stock Exchange.
Stocks were a little changed today, despite no deal in Greece and a 7% drop in the mainland China stock market. Many feel that a deal will be made at the last minute in Greece, or that if they do default, it will not affect other markets. Now, next week marks the end of the first half of the year, and many are arguing that the U.S. economy is showing signs of improvement. That means the U.S. stock market would be the place to be in the second half of the year, even if there is a rate hike. Speaking of an improving economy, we'll see if that trend continues next week, when there will be a lot of data in a short amount of time due to the July 4th holiday. Housing has been strong recently, for example, including home prices. We'll get pending home sales, that's contract signed, for May on Monday, and a look at home price trends on Tuesday. We'll get our first look at June's economic data on Wednesday with manufacturing PMI, and the most important report, the June jobs report, will be out on Thursday. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Steve Dudash joins us now to talk more about the markets and the week ahead. He is president and investment strategist at IHT Wealth Management. Welcome back, Steve. Nice to see you.
Nice to see you too. Thank you.
What are you expecting this week? Some are expecting a lot more volatility. One, because it's a holiday shortened week, but two, because it's so data heavy.
Yeah, there's a ton of data, and like you guys were just talking about with Greece, I think a lot of people have been holding their money off on the sidelines for this weekend to see what the final results happen, and after that, you could see a lot of volume next week. Again, it's the middle of the summer, you're not going to get anything crazy, but you should see more than your average amount.
The big number, as we mentioned, the jobs number out on Thursday morning. Would a strong jobs report be good news or bad news for the stock market? In other words, will the Fed be, we have very strong consumer data coming out lately. Would this be the number that pushes the Fed toward raising rates sooner rather than later?
Yeah, a lot of people feel that way. If the unemployment keeps going down like it's expected to keep doing, and the job reports looks good again, which is what a lot of people are expecting, it's pretty much going to seal the deal that we're going to see an interest rate hike this year. And now the real question starts to become, again, given that Europe doesn't completely fall apart, is it one hike or is it two hikes before the end of the year? And what does that really mean to the bottom line interest rate?
Yeah, and the other issue is there really aren't too many places left to put your money. And so
That's
stocks really, yeah, it is. It's been a real conundrum for a lot of investors. So how do you weather that volatility and still remain fully vested in stocks if you're a longer term investor?
Well, that's the hard part right now, right? Because buying into bonds right now is very difficult to do, knowing that, what are you going to do, buy a 5-year bond and maybe make 1% a year over that and likely know that 2 years from now you're going to hold something that's worth 20% less? The stock market is probably fairly valued right now, maybe a little on the high side. There is a risk of a pullback. So which evil do you pick? I think most of our clients are looking more towards the stock market side. We think that consumer confidence next week is going to go up a little bit more. It's hard to make an argument not to be in the U.S. market right now, but it's not as easy to do as it was, say, a year or two ago.
All right, Steve, thanks. Have a great weekend. Appreciate it.
Yeah, you too.
Steve Dudash with IHT Wealth Management.
Speaking of consumers, they were much more optimistic about the economy this month. The University of Michigan's Consumer Sentiment Index rose 6% from a month ago to a 5-month high. The metric asks consumers to evaluate things like their prospects for the national economy and their own personal finances.
A landmark ruling in Washington today as the Supreme Court voted to legalize gay marriage across the country. Hampton Pearson has the reaction out of the nation's capital and more on how that decision could impact business.
At the Supreme Court, crowds cheered a history-making day for the gay rights movement.
Marriage is a civil right.
The Supreme Court says same-sex marriage is now legal in all 50 states. The court ruled 5-4. The Constitution's guarantees of equal protection and due process mean that states cannot ban same-sex marriages. Justice Anthony Kennedy, a conservative, joined with the court's 4 liberals in crafting the landmark decision. Kennedy said not allowing same-sex couples to marry creates a stigma for their children. Quote, "Without the recognition, stability, and predictability marriage offers, their children suffer the stigma of knowing their families are somehow lesser." Chief Justice John Roberts, among the dissenters, defended traditional marriage between a man and a woman, saying, "A state's decision to maintain the meaning of marriage that has persisted in every culture throughout human history can hardly be called irrational." President Barack Obama, speaking at the White House Rose Garden, hailed the ruling as a milestone in American justice.
There's so much more work to be done to extend the full promise of America to every American. But today we can say, in no uncertain terms, that we've made our union a little more perfect.
13 states have gay marriage bans still in place, and leading Republican presidential candidates saw the High Court's decision as far from perfect. Jeb Bush said, "I believe the Supreme Court should have allowed the states to make this decision." Wisconsin Governor Scott Walker expressed similar concerns. "I believe the Supreme Court decision is a grave mistake."
I pronounce you married.
In New York City, Mayor Bill de Blasio officiated 2 same-sex marriages on the steps of City Hall. Experts say those and other same-sex couples stand to benefit right away. They are now eligible for the same tax breaks on their benefits as traditional couples.
This has a pretty significant impact on companies that offer benefits to same-sex spouses. In particular, it now eliminates all the differences between same-sex spouse coverage and opposite-sex spouse coverage, which primarily was in the area of taxation of benefits.
On Monday, the Supreme Court will bring down the curtain on one of its most historic terms with rulings on the authority of the Environmental Protection Agency to regulate greenhouse gases and a critical decision on capital punishment. Hampton Pearson, Nightly Business Report at the Supreme Court.
Still ahead, why tempers are rising along with the temperatures on some California farms.
Excessive rain is taking a toll on the agricultural markets. Concerns over crop damage sent corn and soybean prices to their highest levels in months. Wheat prices were also up on fears that those storms could prevent crops from being gathered.
Meanwhile, farmers in California want some of that rain to head west. The hugely important agricultural sector in that state is suffering from the opposite problem, a lack of water and access to that precious commodity, and new rules from the state are causing a lot of confusion. Jane Wells has more from Byron, California.
It's going to be a long, dry summer in California, and tempers are rising with temperatures. The state has ordered some with the most senior rights to water to cut usage, but the response has been silence. Nearly 70% of those water users have ignored a deadline to prove they're complying.
There's confusion, and we need to basically find out, what all this means, because everybody's confused.
And confusion breeds lawsuits, including one expected by the Byron Bethany Irrigation District, or BBID, which turned off the water to farms this week under state orders unless farmers would pay $650 an acre foot, more than 30 times normal. Fifth-generation farmer Mario Arnado can't afford that.
We were told about this 2 weeks ago, or 3 weeks ago. So what we did was we irrigated everything we could as fast as we can to keep everything living a little bit longer.
He's ready to sue too. Turns out no one's really sure they have to cut back, since the state said in another lawsuit the curtailment order it sent out June 12th was only informational, not enforceable.
The June 12th letter had more of a threatening tone to it. Now we're finding out they're advisory notices. It's almost like looking at a stop sign and telling you what the speed limit is.
Next door, the water situation looked critical in the community of Mountain House, a $1 billion development financed by the public pension giant CalPERS, which nearly went under during the recession. The high temperature Friday was expected to top 100 degrees.
We're not watering the grass, and we don't wash the car. The car's filthy.
Residents were told they might lose all water this week until the state relented due to health and safety. Now Mountain House is guaranteed water only through the end of the year.
We went to Safeway and we bought approximately 25 cases of water, just in case.
Meantime, the state is warning it is beginning spot checks of people given curtailment orders to see if anyone is cheating. And this alfalfa field owned by the Arnado family, it's not getting any more water this year unless some miraculously falls from the sky. For Nightly Business Report, Jane Wells, Byron, California.
Shares of Seres Therapeutics is more than doubled in the firm's Wall Street debut, and that's where we begin tonight's market focus. The drug maker, which specializes in using bacteria to treat infections, priced shares at $18 apiece, which was above the estimates. The stock closed at $49.36, a gain of 174%. Finish Line also higher on strong results. The sports apparel retailer posting earnings and revenue that topped consensus. This as its merchandise assortment improved and promotional activity eased. Shares popped 4.5% to $28.22.
Honda restated its financial results for the business year after booking expanded airbag recall costs. The new numbers are down 19% from the year before. This as its top airbag supplier, Takata, is at the center of that huge recall of millions of vehicles. because airbags can violently explode. The stock was up a fraction. We're talking about Honda now at $32.86. Microsoft's chief executive, Satya Nadella, has outlined some straightforward goals in an internal memo to employees out today obtained by GeekWire. He said that employees of the tech giant should empower every person and every organization on the planet to achieve more. Specifically, Nadella wants to impact productivity and improve the company's cloud platform. Shares of Microsoft down slightly to $45.26.
The small caps are seeing some big returns. With only a few trading days left in the first half of the year, small caps are outperforming their big cap rivals by quite a bit. What's driving them, and will the trend continue into the second half? Dominic Chu takes a look.
So far this year, the small cap Russell 2000 index hovers near record highs, and it's up 6%. Compare that to the large cap S&P 500, which also sits near record highs, but it's only up 2% year to date, or the Dow, that's up just 0.5%. Some experts believe it's just a game of playing catch-up for the small cap stocks.
After having underperformed last year, small caps came into this year trading a bit cheap relative to the large cap companies. So I think what you saw is they made up some lost ground from last year, and then also it was these important drivers of stronger domestic growth, less vulnerability to a stronger dollar.
The belief by many investors is that small cap companies are more closely tied to the prospects of the domestic U.S. economy and less prone to the shocks felt by larger companies who operate in a lot of global markets. But more dependence on the U.S. economy is a double-edged sword, and a turn for the worse domestically could derail the small cap rally.
If we were to see an environment where either there was a significant threat to the economy or significant volatility introduced because of a change in Fed policy, which we're not expecting, I think those are the kind of things that could perhaps undermine either the earnings momentum within small cap companies or the environment for those people investing in small caps.
But there is a case to be made for taking a balanced approach and keeping some large cap stocks in your portfolio. If some of the major overhangs in the global markets clear up, investors may want some exposure to possible global growth, which some large cap stocks may provide.
And we have favored the larger cap stocks, not only because I think as we put some of the energy concerns behind us, that you'll get better performance from those from that level, but also some of the general trends we think are shifting more to international.
The stock market has been relatively calm through the first half of the year. And if volatility picks up in the second half, having a diversified portfolio may help insulate investors from bigger shocks. For Nightly Business Report, I'm Dominic Chu.
Now, even though large caps have underperformed the small caps, that's where our market monitor is still finding opportunity. Now, last time he was with us on this program back in February, he recommended these stocks: Abbott Labs, which in the last 3 months is up 10%. Accenture, which has gained 13% since he was with us in February, and Medtronic, which is up about 1.5% in that time. He, by the way, is Jason Pride, Director of Investment Strategy at Glenmead, an asset management firm with $29 billion under management. So, Jason, you still like these stocks. I guess that's the definition of a long-term investor anyway, isn't it?
Well, you know, this is an interesting environment. We've got the U.S. equity markets, which are a little bit overvalued. I believe one of your guests has already commented on that earlier, and international markets which are at the discount. And that's really one of the places where you want to take risk. But in order to offset and really manage an overall portfolio, if you're going to take your risk by picking up a little bit more small caps because the valuation's better there, and a little bit international because the valuation's a lot better there, then you need to de-risk what you're doing in the large cap space. And you can do that by playing an equity income, kind of quality dividend growth sort of focus. And when you do that, you pick up things that are primarily, you know, the better valued opportunities right now are in the healthcare space, even with the run that we've seen in Abbott Labs. Okay. And you find little opportunities across the board with things like Accenture, you know, a global IT outsourcing firm that has great growth prospects, but a really nice, stable franchise, nice dividend, and nice growth of that dividend over time.
So you're almost using these as a hedge against the riskier side of your portfolio, but with a gain of better than...
That's basically what we're doing.
Yeah, in Abbott Labs, up 10%, and Accenture, up 13%. You're not tempted to take a little bit of a profit there?
Well, you know, we have been taking a little bit of a profit. We've actually added to our small cap exposure recently. We've been keeping a very healthy international equity position, but really these act as a nice offset to what is otherwise a slightly riskier exposure in other parts of our equity portfolio, and the fact that truthfully we're also overweight equities at this point in time and underweight fixed income. So we really need something to provide ballast in the portfolio, and one of the most attractive opportunities to do that is this equity income quality space, whatever you want to call it, but the idea of playing defensive within your large cap portfolio.
Very quickly, I know a lot of our viewers to go get income in the equity markets look to utilities, which have been beaten down, perhaps anticipating higher rates. Would you look there as see some value there at all?
See, that's an interesting dichotomy that's happening today, is basically the things that typically would be categorized as high income or high growth. Those are the overpriced areas of the equity market, and this safety area of quality defensive equity, things that I call dividend growth or equity income, those are the areas that are more attractive. So it's not a situation where you want to chase either the highest growth or the highest dividends. You actually want to go for the things that are the most stable within the large cap space. That's not true across the board.
Point well taken. Jason Pride of Glenmead, good to see you again. Thanks for joining us tonight.
Thanks for having me.
Coming up, they made their fortunes in China. So why do so many wealthy want to leave that country?
Here's what to watch next week. It's the end of the quarter and the month, believe it or not, so lots of data, including a read on manufacturing. And since the markets are closed on Friday for Independence Day, the Labor Department will release the June employment report on Thursday morning. Another read on the jobs market will come with a report on private payrolls as well. And that's what to watch next week.
Some of the biggest consumer companies in the world are getting hit by a double whammy, a sluggish economy and a changing consumer. And today, executives from some of those very companies were in New York telling investors what they plan on doing about that. Sarah Eisen has more from the Consumer Goods Summit in New York.
When it comes to the basics, food, beverages, and household products, consumers are holding back. And for the giant companies behind those brands, growth is hard to come by. From Coca-Cola to Campbell's Soup to Nestle, profits are coming from cost cuts and higher prices, not sales growth.
We are part of a society, and in general, the economy is not growing so nicely. So we are part of that. But I do see lots of opportunities anyhow. So we have been growing through the crisis every year, and that is what matters.
Economic problems, including slowdowns in emerging markets like China and Brazil, and sluggish growth in the U.S., Europe, and Japan. It's also changing consumer tastes.
What is natural, what is gluten-free, there's new concepts coming up, and we have to link and connect with these trends.
Nestle, for instance, says it is removing fake yellow dye from Butterfingers. Kraft is doing the same with mac and cheese. It's too soon to tell whether consumers are actually responding to these ingredient changes by the companies, but until economic growth comes back in force, especially in emerging markets, the companies are struggling. For Nightly Business Report, I'm Sarah Eisen.
By the way, safety regulators are investigating complaints about Ford's F-150 pickup trucks. Those are the top-selling vehicles in the country right now. As many as 250,000 pickups could be impacted by this probe, which is looking into reports that the power brake assist can fail, making it hard to stop in some of those vehicles.
And finally tonight, even as the Chinese government introduces new economic reforms, many of China's wealthy are leaving that country in droves, and they're doing it in an unusual and controversial way. Eunice Yoon has more.
China is seen by many as a land of opportunity, now home to more than 3 million millionaires. But a 2014 survey found that 2 of 3 polled are looking to emigrate. Julie Ji is joining the exodus of wealthy people leaving China. She made her fortune manufacturing clothes in the southeastern city of Suzhou.
A lot of young people don't like this type of work anymore, so I want to look for new business opportunities.
So she's moving to America because there, Ji says, she feels free.
Can I take a look around? Yeah, sure, of course.
Immigration agents like Anna Young help affluent Chinese qualify for the U.S.'s EB-5 visa program, a scheme where foreigners invest at least $500,000 into an American project in exchange for a green card. Young said the average wealth of her clients is about $1 million in assets.
Why would they want to leave? Pollution and the safety of food. I think that's the main concern of them. When they get rich, they are naturally thinking of better education for their kids and better lifestyle, I should say.
Hi, Ines. Nice to meet you again.
We caught up with G after she moved to New York. She invested $500,000 into a gold mine in Idaho for her green card. G is hoping to start a business in the U.S.
In the U.S., everything is very reasonable. Chinese might not be used to that. I like a place with rules. For rich people in China, government policies affect how you establish your business. Success is not about how hardworking you are, but whether the country supports your industry.
The Chinese government is hoping to appeal to people like G, promising to clean up the environment and squash corruption as more of its citizens demand a modern, healthier society. But so far, the China dream hasn't included enough assurances for G to want to return home soon. For Nightly Business Report, I'm Eunice Yoon in New York.
And that's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a wonderful weekend, everybody. We'll see you again on Monday.